So the Fed really wants a slowdown of the economy. They're getting it, and I'm going to have the economic news to prove that today. So my name is Dan Free. I do this report on a daily basis to inform you guys what's going on in the economy that will affect housing. Because you're watching this channel, you're most likely looking to maybe purchase your first house or maybe first investment property. And I'm here to educate you guys on the products, the rates, but I'm not here to figure out what kind of value or what home prices are in your area, because that's why you use a realtor. I don't know what's going on with home prices because it's so compartmentalized. You know, in my neighborhood, house prices are fine. They're actually continuing an uptick. If you got in San Diego, they're down about maybe 10% over the last year. So it's going to really depend on where you live. So if you want all that data and the housing market's crashing and everything else, go to mainstream media. You're here to get the facts. So let's get over to what the news looks like today. The first thing we're going to see is right here, the stock market. The stock market's liking something. The Dow Jones is up, NASDAQ's up, S&P's up, and then regulators unveil plan to force regional banks to raise their debt. That just popped up on the screen. Wasn't planning on talking about it, but let's address that right now. So a lot of people are saying, okay, Dan, here's the next wave to really crash regional banks. Well, I'm going to have to counter that. What they're doing right now is through this data is they're saying we want the regional banks to increase their assets, to have more assets on their books than they currently do. That's not a bad thing. It'll help encourage the strength of the banking system. So don't be bamboozled over, oh my God, the regulators are doing this. Why? Because of this and everything else. They're just saying, okay, Mr. Bank, Mrs. Bank, you need more in capital sitting on the sidelines in case you do have a run on the banks. Now, what happened over the last 6 months, you hearing, people are running, to the banks and taking all their money out. Yeah, that's kind of true, but what are they doing? They're taking it from a savings account and giving them 0.005 in interest, moving them over to a short-term, maybe treasury, CD, or money market around 5%. Don't blame them. So that's really not a run on the banks that they're pulling out all their money and putting it under their mattress. They're actually making prudent decisions behind all this. So that's what we want to start with. But the thing I want to talk about right now is right here. This is the news that we just got today, and the markets are loving it. Why? Well, because the Federal Reserve basically wants the economy to slow down. What does that mean? It means less people working, less wage growth, and consumer confidence plummeting. Because if you're not confident in as a consumer, you're not going to buy stuff. You're going to start hoarding your money, and you're not going to spend it. With all that being taking place, they're expecting inflation really to come down and down and down. So in today's news, what we have, the economic calendar, consumer confidence, it's dropping and dropping substantially. I don't know about you, but I have no confidence in the economy right now. I'll just say that. But here's the big point. JOLT index. This is how many job openings there are. It's plummeting because people are not hiring. So that's what's happening. Previous reading was 9.165 million people. There were basically job openings. They're expecting 9.4. It crashed all the way down to 8.8. Huge numbers. I'm going to show you how this is actually affecting mortgage rates here in a minute. But the one concern that I have here is the Federal Reserve wants us to stop spending, but the government keeps stimulating the economy, and then you have millions of workers out there. Let's just break down a couple of the segments that we're looking at. And I'm not blaming these people. I'm just saying this is wage growth where the Federal Reserve really doesn't want wage growth. If you go in here, American airline pilots sweeten their labor deal. They're getting about a 21% pay increase. Okay, so now you have all American airline pilots getting a raise. Nothing, God bless them. But this is more money in the economy. Next thing you want to go is to the UPS. UPS surges after union deals significantly boost wages. So we just had that out this month as well. And then one last thing is now the United Auto Workers, they're pushing for a strike or wage improvements. So you have three huge organizations just granting pay raises to all these people. And folks, we're talking about millions of people out there. So if you have wage growth continuing, those people are going to continue to spend. Inflation isn't going to come back down where the Federal Reserve wants it, or may it. So that's what we're really pondering here. The first thing I want to go over is what is all this? How is this affecting the bond markets right now? Why? Well, the reason being is we watch the bond market to figure out what's going on with mortgage rates. So you can see big gains after JOLT data. Guys, I'm just doing this basically live on a whim. I got my notes, but as this data comes in, we're seeing this. So look at this spike. Right now we had MBSs. They're up almost 40 points right here. So let me explain this to you. Why I follow these charts is because I watch to figure out where mortgage rates are going. Because if we think and we feel that if mortgage rates get down to maybe 5.5%, 6%, maybe a little over 6%, it's going to be a huge boost to the housing market. So what we follow here on this channel is the MBS market. What is the MBS market? It's actually a mortgage-backed securities. It's a bond that trades on Wall Street that's yield is the biggest component of your mortgage rate. So what's happening right now, here's the price of the bond. Here's the net effect on what's happening today just because of the data. We see the market up 39 points right now. So that means basically right through here, mortgage rates are probably going to drop between 1/8 and 1/4 today alone on this news. Fantastic news coming out. So that's all based on the JOLT index, as you saw the note that came out just now. So between the JOLT index and consumer confidence, the markets are liking this. Federal Reserve's going to love this. So based on all this, what's going on with mortgage rates? Well, here's where mortgage rates are right now. So with this, what you're seeing on your screen is the average rate out there for somebody buying their first house. There's 5 criteria behind this. And these rates are issued by Mortgage News Daily on a daily basis. 5 criteria is 1, the person is a first-time home buyer. 2, they're buying a primary home. 3, it's a single family home. So if that's you, kudos. The next thing is their credit score. Credit score is over 740. Okay, that might still be you. Now, the last piece of this puzzle is they're putting down 20%. 20%. Okay, so is that you? Maybe, maybe not. Okay, so if that's not you, what I'd suggest you do is if you'd like to get help, maybe trying to get pre-qualified to buy your first house or investment property, maybe you need a home equity loan to clear up some of those high interest rate debts because credit card rates now can get up to, I've seen recently, 27 or 28%. So if you're loaded on that kind of debt, you might want to look at a home equity loan to use some of the equity in your house to use a smaller or lower interest rate to pay off a lot of that debt. So what you need to do, or what I'd ask you to do is if you need some assistance with any of this, please reach out to me. My name is Dan Frio. I'm licensed in all 50 states throughout the whole country as well as Puerto Rico. I would love to help you. If you go to therateupdate.com, here's my website. You can check out all kind of things from the how do you apply now, loan estimates. So if you have a loan estimate you got from another lender and you want to check and see, Dan, is this a good quote that I got? Well, click here and you can upload your loan estimate. I'll get back with you within 24 hours and let you know what I think of that rate, the fees and everything else. Maybe we can do better. Maybe you did a great job. Calculators, rent versus buy, and all kind of different calculators and a bunch of other things. But what I'd ask you to do is if you want to check us out and at least, kick the tires to see if you qualify for any of these programs, please don't disqualify yourself. The best way to do it is go to therateupdate.com or you can give us a call, 844-775-LOAN. That's 844-775-5626. Or if you're like, Dan, don't really need that help, I just want to get the ball started, we'll go over here. You can hit the Apply Now button right over there and get the paperwork started today. Thanks so much for watching, guys. I'm going to ask you one thing today. If you're not a subscriber and you like the content of my video, please don't forget to subscribe down below. Thanks so much for watching. God bless. Have a fantastic day. See you tomorrow. Bye-bye.